A very warm welcome to you, our viewers. In today's Money Mastery session, we're going to break down banking products and show you how your money can work for you when you partner with the right financial institution. I take care of high net worth customers within NCBA. And to join us today is Gladys Akinyi. Gladys Akinyi is the Consumer Director within NCBA Bank. Gladys, karibu.
Thank you so much for that.
So to get us going, we'll start with a very common term, debt, yani deni. Gladys, what can you tell us about debt?
Debt in its very simplest form is either money owed or due, either to a person or an institution.
Gladys, most people have a debt here and there. Perhaps I have some money in an informal setup, in a chama. I have a formal facility in a bank. Perhaps I've borrowed from a mobile banking company, say like Safaricom. Is it possible to live a debt-free life, in your opinion?
Is it possible to really live debt-free? In an ideal world, the perfect amount of debt is no debt. But is that really realistic? Noting that people want to invest, they want to take up loans to either buy a house, to start a business. So how do they do this? They have to incur some level of debt.
Going by your description, it seems like debt is not a bad thing, which is really good to know, because some people shy away from taking debts. I would then want to find out from you, Gladys, are there different kinds of debts, or is it just debt is debt? Mm-hmm.
Right. So when you're looking at debt, you should determine whether this debt is beneficial to you or not. Good debts will benefit your financial future, and bad debts will actually harm it. So the good thing is, whatever you're buying makes that distinction very, very clear right from the beginning.
So it is for me as a person who's taking a debt to assess the kind of debt that I'm taking. Is that what you're saying?
Paulette, you're correct in that assessment. Whatever you're buying, again, will clearly make the distinction for you. So you'll know right from the beginning whether it is a good debt or it is a bad debt. Because remember that good debt contributes to your financial future, and bad debt actually harms it.
So that is interesting, because then just bringing it closer home, what would you say is an example of a good debt? Just so that we can relate to what this good debt is all about. What can you bring out as an example of a good debt?
Great. There are a number of examples of good debts. Good debts, normally when you take them on, you've looked at your future goals. And also you've looked at the investment returns on that particular investment or what you want to do. So examples of good debts, for instance, would be you taking a mortgage so that you can own a house. You can also take money to invest in a business. You can also invest in yourself by taking an education loan, for instance. So these are the examples of good debts. As you can see, you've made an assumption that, for instance, if you take on a mortgage, that you'll have shelter for your family. If you take on an education loan, that you're going to get a degree, just for your own knowledge, but also to help you in terms of securing employment.
Mm-hmm.
Yes.
Okay, as a recap, I hear you say that, there's good, there's bad debt. And I hear also from what you have indicated that a good debt is one that is supposed to give you some kind of return in the future. Yeah. Just confirming that is the situation.
Yeah, but looking at also the examples that I have given, say, for instance, even if I take the example of an education for you to finance your undergraduate education, it doesn't necessarily guarantee you a job at the end of the day. Precisely. Yeah. And also you'll note that even if you, if for instance you took money to invest in a business, there's no guarantee that that business will flourish. Some businesses fail. Yeah, but that's not to discourage anyone, because we are here to help you determine what debts would be beneficial to you. Yeah, for the businesses, we are also able to help you with your business planning, and also to help you with assessing the market, so that we are working with you throughout this journey of creating a prosperous future for yourself.
Okay, from your description, I'm starting to feel lured to take up a debt, and a good debt at that, because I already can tell that there's a lot of positive aspects of taking up a good debt. Yeah. And so I just want to find out from you, are there any risks involved with taking a debt?
There are risks, and the main risk is your ability to repay, because you can't really predict the future. Yeah, most of us currently would not have predicted that we'd be in this environment that we are in right now, where we've seen businesses failing because of measures that have been instituted to contain the COVID-19 pandemic. So, for instance, you may also take a mortgage. Yeah, banks would be able to give you up to 105% financing, but you really need to think about incurring that debt, because what it might do is it might hinder you from actually saving, because most of your income will go towards repaying that debt. Yes. The other example is a credit card purchase. So, for instance, there's World Cup, and that's a once-in-a-lifetime experience. So you might not be able to afford it, but since you have access to credit, you could use your credit card and buy those.
That's very tempting, Gladys. Yeah, that can happen.
Yeah, so yes, you go and have that once-in-a-lifetime opportunity, but please remember that you will still have to pay that debt at one point or the other.
Well, that's a very interesting example that you give, because of course temptations do knock in, and it's good to know that you need to have that discipline to know when to start and when to stop with taking credit. I don't want to be in bad books with my bank. How would you propose I go about it, just so that there is no bad book that is associated with my name?
The secret lies in discipline and self-control. Learn to say no to yourself. Bad debts are brought about by the need for instant gratification. For instance, the latest iPhone has just been launched. You want to get it. Yet, you have a functional phone and you actually don't need this phone. That's an example of, instant gratification. Your friends may also be going out for a holiday and you want to join them, yet you can barely afford that expense. So when you master your desires for instant gratification, you are well on your way to being debt-free.
Wow, that is pointing towards character change. I need to know when to say yes to myself, and I need to know when I should stop.
That's correct. At least that way you'll avoid bad debts.
Okay, interesting concepts, things that we can take out and apply. What would you say, Gladys, is the impact of COVID, long-term impact of COVID on the consumers and the bank?
Okay. Right now, there's a lot of uncertainty, both with businesses and also with consumers. As a bank, we have reached out to our customers and allowed them to actually come to us if they're in financial distress, and given them options on how they can restructure their loans. This is based on every customer's individual circumstances, and we have a team of relationship managers that will work with the customer through that journey. What we are doing is that we are providing the much needed support to our customers during this difficult time. So for instance, if you've had a salary cut, we'll be able to restructure your loan repayment to coincide with the salary that has been cut. But also, if you've totally lost your livelihood as a result of COVID, then we'll be able to work a plan that will give you relief, both by allowing you to not pay your principal plus interest for predetermined periods of time, ranging between 3 to 6 months. So each customer is treated based on their personal circumstances.
Okay. You just picked it out from me. I was going to ask, is this a standard way of measuring all the customers, or is it customized? So I like that you say that, if I do have different circumstances from the next person who has come to you, you would treat me differently and look at my circumstances. I think that's a critical thing to note. And I like that you bring that out, Gladys.
So there's also a positive side to the circumstances that we find ourselves in. Banks have been forced to develop products and services to serve the needs of customers. But also what consumers have realized is that they need to start saving for that rainy day. So that in the event that we ever find ourselves in a pandemic situation, at least they're more prepared in the sense that they will have some fallback plans.
Okay, thank you very much, Gladys. Those are very good insights that you've shared with us. We have a very clear distinction between a good debt and a bad debt. Additionally, you have shared with us that we need to invest in something that is going to give us a positive return. Very good pointers for us to note. And so viewers, that is all we had to share today. We thank you very much for joining us for this session. We shall see you next time on Money Mastery, where your money makes all the moves. Thank you.
NCBA.